So hi guys, welcome back to another episode of the Technical Breakdowns. So today is on Monday. We normally do a technical breakdown every Monday to recommend to you some of the markets that you're watching, what to expect in the market, and to just show you how to approach markets and to share how we are trading. We do believe in sharing how we are trading, and we've been doing this now for the last couple of years for those who are new. But for those who are old, welcome back to another episode. So today I'm going to take you through a couple of the markets that I trade and what I expect from them. From a fundamental perspective, not much has changed. Inflation is still high. Unemployment actually ticked higher. The last number we had in the US, rates are still going up across the world. Reserve Bank of Australia last week hiked. ECB hiked, in fact, by 75 basis points. Bank of Canada hiked by 50 basis points. And they don't think they're stopping anytime soon. So we can see some markets coming back a bit. But I don't think most, this is my opinion though, I think we still have some downside in the market. I don't think the trend has clearly faded completely. I don't think it's time for a new policy yet or for a new trend to emerge. So some of the moves that we're seeing in these markets, I do believe they are dead cat bounces, or in other words, you can say they're just pullbacks before the market continues in the direction it has been trending around for pretty much the whole of this year. If you look at stocks, they've been down this year. Our indexes have been down this year. Cryptos have been down this year. The dollar has been doing exceptionally well this year, coming all the way to trade as high as 110. I still think there's some upside on it. For you to really understand some of these things that are going on, I think it's important to look at the historical context of what really happened the last time we had such a period. And the last time, which is analogous to what we currently have, is the 1970s, when we had inflation being very, very high due to the oil shock that came about, which was caused by the war between Israel and Iraq, and that resulted in inflation going pretty high. And Paul Volcker, who was the man running the central bank at that time, had to hike rates all the way to about 20% to combat inflation. Now, I'm not saying rates will go back to 20% like they did in 1970, but I still think that for us to bring inflation back to 2%, where it should be, the Feds have to be pretty aggressive, and they have to show that stand despite a recession looming. So I think central banks for the first time will be facing a case whereby it's a question of whether to knock off growth and send the whole economy to recession and stay in a recession for some time for us to fight inflation, or combat growth and let inflation still spiral. I think the first option is the one they're likely to do, but it's quite hard. I wouldn't say it's easy, because it's not easy to knock off growth, knock off companies, knock off people, because people will lose jobs and such things will happen in an effort to combat inflation. However, looking at economics and how economics work, I don't think they have any other option, at least for now. They have to at least allow some pain to come back to people for us to experience some pleasure in the future. Otherwise, you may indulge in so much pleasure and so much growth and forget that there are down periods which happen to everyone and to the economies in general. So what I'm going to do is I'm going to look at different markets. I'm going to start off from gold. So I normally start off my analysis from gold. Gold is one of the markets I've been trading now for around 6-7 years. So I've been tracking this market well for some time now. I know how it moves. I know the levels that it respects and the fundamentals that shape this market. So looking at gold, I'd love to start from the weekly chart. I think there are some interesting things that are going on in these markets. If you just zoom in, you'll discover very quickly that you had a double top rejection at the 2000 level. Markets consolidated here for quite some time. So we could say for the last 2 years, let's say from August 2020 all the way to March of 2022, or pretty much right now where it's August of 2022, gold has done nothing. It's just been ranging between 1900, 1700, and 2000. So this is the second time we've approached 1700 as a crucial level, and you can see some demand coming back into the market. However, I'm looking for a break of this level and a continuation of the trend to the downside. I think right now it's no longer a time where markets will move to the upside. I think we are now gearing up for a move to the downside. Why I think that is, if you just move back a bit and go to the monthly chart, I think you need to put your analysis into context. You need to understand things from a context perspective, not just from a setup perspective or from a money-making perspective. I think most traders make that mistake. They assume that in trading it's all about your setup and it's all about your rules. But I think really the idea behind trading is for us to be able to follow markets in different dynamics. So if you go back to the monthly chart, which is what I'm saying, you can see clearly we had this long consolidation between 2013 and 2018 when you had this long move. So I remember trading this move to the upside all the way to 2000. This was a result of trade war, COVID crisis coming in, the pumping in of money, which brought about inflation. We then had the double top formation at the 2000 level. And you can see markets now have started coming back lower. I'm expecting this market to move from 1700 to 1750. If I just go down to the daily chart, you'll see clearly that we're trading within this beautiful channel formation, a nice drive to the downside. These are very basic patterns, but I think in trading, the more experienced you become, the more you realize that being basic and being simple is the right way to trade. There's no money to be made by being complex in the market. In fact, the setups that work best are the ones which I think any layman can see well. So I'm expecting a pullback all the way to 1750, and then I'll be looking for a drop to 1650, which is the next downside target, at least from how I look at markets. I think 1650 is what I'll be watching for next. As much as I'm looking for 1400, 1500 in the long run, I think 1650 or 1600 are levels you should be very keen about. If I go to the 4-hour chart, so let me just go back to the 4-hour chart. What you'll very quickly realize is markets have been moving sideways a bit between 1725 and 1700. I had a channel formation here which was taken out. I now expect these markets to come back to 1750. So for the week, I think for me there is no setup, but I think markets are likely to break past 1725 and rally to 1750 before the end of this week. That's what I'd be watching for this week, unless we get a change in fundamentals or something of the sort. So that's my outlook on gold. Next I look at oil. Oil has come back swiftly from 120 to trade as low as 82, 83. We're now seeing a pullback. How far will the pullback go? We need to go back to the weekly chart again, look at the context of how the market is trading. And if you just look at the context of this market, you'll very quickly realize that we are now approaching very critical levels to the downside. Markets have come back from 120 to trade at 85, 81, which has coincided with this third trend line bounce and this critical level, the R1 level. So what we expect is markets can come back a bit. I think we can see some demand coming back a bit into this market. Probably a move to 90, a move to 100. I have a very good justification for $90 a barrel as the next level that I'll be watching. But I think if markets break 90, I would not be surprised by a pullback to $100 a barrel. And to the extreme cases, perhaps even $110 a barrel. I don't think I'd be surprised at all by seeing those prices in the coming future, especially if markets have some strong bullish pressure coming into them. Anyway, looking at oil, you can see clearly we had a steep collapse. We then had this move to the downside, which took us to about 82.5. We're now seeing a move back to about $90 a barrel, $91 a barrel. I think that's why I'm watching 90, 91, 92.5. If we get a good bounce here, I'll be looking for a potential drop to $80 a barrel, 78, 77.5. But I think where I think ultimately oil is likely to trade before the end of this year is $70 a barrel. I think that's the level that is sparking a lot of interest for me, and I think I'll be very keen to see if we'll have this last leg of bearish momentum to trade at $70 a barrel before the year closes. On the 4-hour chart for this week, I have no clear patterns to suggest any movement. So this is a week for me where I'm protecting capital on this market. I'm not putting capital at risk, I think, in this market for this week because there's nothing clear for me to allocate money and risk on. I don't look for trades, I wait for trades to come to me. I think once you again mature in trading, you very quickly realize that you don't need to trade every day to make money. Instead, you actually need to learn how to stay out of markets to protect your money and wait for those few opportunities where you can make something from the market. So that's my idea on oil. I think I've shared where I expect the market to go and why I expect it to go there and what I expect after it goes there. So if you track how you look at markets, you'll very quickly realize that that is what I'm watching. Anyway, if you go to the Dow Jones, I think on the daily chart, the Dow has been trading in the form of a channel again. We've gotten 3 trend line bounces, beautiful ones. Markets have broken this flag-like structure, and now we have come back to retest the central pivots, 32,500 level. If I just go down to the 4-hour chart, you can see clearly markets are coming back to trade at 32,500. That's where I'm watching markets to trade, at least for this week. If markets break past 32,500, probably we'll see 33,000. But I don't think we are likely to take out 33,000. If we take out 33,000, I think I'll update my views and maybe probably even start thinking about long positions now, because probably markets have turned. You don't really force markets to abide by your ideas, you go with what markets are doing. So I'm watching 32.5. If we reject that level and I get a good signal, I'll be looking for shorts. But again, for this week, nothing to be done in this particular market. Next, I look at the pound. The pound has rejected 1.15 very, very well. This is a major level for the pound historically. It's failed to go below this level. I think the last bottom that was established during COVID, which was in 2020 actually in this market, came about at 1.15. And now we've seen 1.15 again during this inflation crisis. And it looks like markets are coming back. Honestly, if we take out 1.15, I think very easily these markets could go down to trade as low as 1.1. But I don't think it will be an easy ride to take out the 1.15. So in the short term, I'm looking for a pullback to 1.175, 1.18, probably 1.2 in the extreme cases. I wouldn't be surprised by that also. But I think once we start breaking 1.2 again, which is a major critical level again on this pair, then I'll start updating my views. But I think if we're still trading below 1.2, I think the trend is still to the downside. And like I always like saying, the trend is your friend until it bends. On the 4-hour chart, again, nothing to be done. These are pullback times. So how I like trading is trading in the direction of the trend. I've designed a system that is designed to do that very, very well. So often when markets are pulling back, I may not get very, very good setups. I may have to stay out of the markets for some time as I wait for a good setup. So markets have broken 1.1625. We're likely to see 1.175, 1.1875, probably even 1.2. Let's see what comes from this, at least for the next few weeks. The yen has been at the weakest point. I think I've seen it in my history of trading in my short career of 6 years. I think the yen has now tapped into 145 on euro yen. I think relative to other currencies, it's very, very weak. If you look at US dollar against the yen, I think it's, I don't know where it is, but I don't trade it actually. But looking at euro yen, we've seen a strong bull market for this market from 125. We're now to 145. I think 150 easily done. That's where I'm waiting for markets to come back to. As the other countries around the world are hiking rates, the Japanese government has decided to lower rates. They've devalued their currency. And part of the reason they've done that is they're a net exporting country, so they don't import much. So they are not really struggling with a weak yen in buying much. In fact, they're benefiting. So those are some fundamentals that you can look into to understand more about them. They're very, very helpful also in giving you more conviction in your ideas and how you position yourself in different markets. On the 4-hour chart, you can see the yen just moving higher, breaking past 143. I think we've taken out 145. I wouldn't try and sell this market. I think that is one of the greatest errors you can make. Fading such strong moves is not really a good idea. You may end up losing a lot of money trying to fade this move to the downside. Often the best way to actually trade this move, if you want to trade it contrarian, is to wait for the first leg of bearish momentum, and then you can now start coming in once it's clearly indicated that it's going to the downside. Finally, I look at Bitcoin. I think some people are interested in cryptos. I also pay attention to cryptos a bit. However, I invest in them quite differently from how I approach my own personal trading. Anyway, looking at cryptos, I think I'll go to the weekly chart first to just see what's happening there. And you'll see clearly that we have 3 trendline bounces. We rejected 30,000. Now we've bounced off 20,000. From 60,000, I think we've come back down almost 50%, not even 50. We've come back down about 70%, 60 something percent actually, from 60,000 to 20,000. So if it goes back to 60,000, you can easily triple your money. I think the next leg will see 100,000, but I don't see that leg coming in next week, next year, or next year but one. I think markets will stay down for some time. This is not going to be a quick recovery like we expect, but and obviously things always change. And when facts change, you obviously change your mind. So when that happens, we'll change our minds, but for now we don't expect it to probably come back that fast. Maybe it will stabilize between here and 30. It could go as low as 10, 15. Who knows? Let's just wait. On the daily chart, I'm waiting for this potential sell-off. I'm still bearish, heavily bearish on this market. I'm looking for 15,000. I think that's where this market is ultimately going. We got this break of this flag formation. We've gotten a correction forming a potential setup. And now this is a setup that I'd be looking for probably to 15,000. So those are the markets that I'll look at. On the forward chart, I don't think there's anything interesting. Finally, I'll close off by looking at the dollar. So the dollar has been king now for quite some time, coming back to trade at 110 and dominating most other currencies. So we've seen a minor correction to 107.5. But again, like I always said, in my experience, don't try and be the first one to sell a particular market or to predict that the market has turned. But that's my philosophy. You need to come up with your own. I don't pick tops and I don't pick bottoms. Clearly, you can see this market has bounced off a couple of times, coming back to major levels and then just trending to the upside. I don't see any different case for this one. In fact, I think we'll retest on a 7.5. Maybe we'll consolidate here for a bit and then we'll trade as high as 112.5, which is the next target for me. So that's where I'll stop my analysis for today. I hope it was of help to you. On the fundamental space, other than the Feds, I don't think there's anything else you should be paying attention to for this week. And I'll catch you guys in the next one. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.